taxes.
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 Taxation.
Taxation.
Raising
Hold on, baby.
taxes.
Hold on. Tax.
Tax refund.
Yeah, it feels like we're always hearing about taxes, and it's normally not a very positive conversation. We get used to thinking that taxes equals bad from the very first time we're ever introduced to them. Picture yourself at your very first job. You're there, working away, excited to make your first $100. After 2 weeks, you get handed your first paycheck, you rip it open, and it says $90 instead. That can't be right, can it? Then you look closer and you see that some of your money has been given to the government. What? You probably didn't think much about why that happens. You just knew that it felt like you were losing out on money that you'd earned. And over time, people really don't seem to lose that negative feeling. As a collective, people hate paying taxes. And there's definitely reasons for that, like the fact that really rich people can pay lower taxes than everyone else, and the fact that there are companies that lobby to make sure that it stays that way. And I promise we'll get to that. But there is a reason that we pay taxes. They're kind of the glue that keeps our society, government, and economy running. And even though we might feel like our taxes are being taken from us and given to something that doesn't benefit us, that's not really what's happening. Think of it like this. Let's say that all of a sudden you didn't have to pay for gas anymore. You could fill up for free, just drive up to a pump, get your gas, and then drive off. Sounds really convenient and really efficient. But then at the end of the year, you get a bill sent to you in the mail for all of the gas you used. Even though you'd be paying the same amount of money as before and it would be an easier process, people probably wouldn't view it that way. Now, it is a little bit different with taxes because it's not so direct. What our taxes pay for is so widespread and such a part of our everyday lives that we don't really feel a connection between our money and what it's being spent on. Like, let's look at healthcare in Canada where we live. We usually refer to Canada's healthcare as free, but that's not really true. We pay for it with our taxes. But it is a major benefit. And even though it brings up the tax rate a bit, it can save us a lot of money when an actual medical emergency comes up. But a lot of people aren't looking at their paycheck and seeing the chunk of money going to taxes and thinking, wow, I'm so glad it'll cost me $0 if I break my arm. Okay, so here's how taxes work for most people. You have a salary or a pre-tax salary. Then you work throughout the year doing your thing from your employer, and every few weeks you get paid and you pay taxes. Then whatever is left over from that or your post-tax income is for you to spend, save, or invest however you choose to. Then over time, as your pre-tax salary grows, either from you getting pay raises or from you switching jobs, the amount of taxes that you're expected to pay goes up too. Let's actually have Dennis pop in for a second and explain that part.
Okay, so in the US and Canada, we have what's called a progressive tax system with marginal tax rates. This means that if you make up to $50,000, then you pay 15% in federal taxes. Then if you make up to $100,000, then you pay 20.5% in federal taxes, but not on the full amount. Like if you made $75,000, you'd pay 15% on $50,000 and then 20.5% on $25,000. And the buckets keep growing from there. So yes, if you make more money, you pay more taxes, but you still make more money overall.
So you pay taxes based on your income, but there are ways to bring down your taxable income. Like if you have one job and one income source, then your salary is your full taxable income. And if you left it at that, then you pay taxes on everything that you make. But the government has a list of tax deductions and tax credits that you can take advantage of. And the reason that they do this is to subtly encourage people to do certain things. For example, there's the first-time homebuyers deduction to get people to buy homes, or there's charitable tax credits to get people to donate money. And there's a bunch of other ones like disability support, post-secondary, and childcare expenses. Now, as much of all of those things help people in general or get people to do certain things, they also end up being what really rich people or big corporations can use to their advantage. There's so many examples of Jeff Bezos, Elon Musk, Warren Buffett, all paying lower tax rates than their employees. And it's true, they have the time and also the ability to hire people to use their time to figure out as many tax loopholes as possible. And all of them end up messing up the system. But again, we're gonna talk more about that later. We wanna talk a little bit more about you first. So you pay money to the federal government, but where's that money actually going?
When you look at your pay stub, you'll see the section that shows all the money that's being taken out for taxes. In Canada, that's CPP, EI, federal tax, and income tax. So that's money that's going towards pension plans, which is a part of Canada's retirement system. So basically, you're paying money now for older people to get a benefit, and then when you're older, younger people will pay for you. Then there's also money going to employment insurance, which you could use if you lose your job, and also for parental leave. And then there's the big buckets, like federal tax and provincial tax. In the US, there's also federal and state tax, but the other deductions are for FICA, the Federal Insurance Contribution Act, which funds both Medicare and Social Security for retiring and old age people. So we know where some of the money goes directly, but what about the money that's going to the federal government? It changes every year, but here's what it looked like in Canada using the most recent full breakdown that we could find. About 15.4% goes towards elderly benefits, so senior citizens who are able to get old age security and the guaranteed income supplement, and then 13.6% goes towards employment insurance and children's benefits. So this includes things like the universal child care benefit and EI. And once again, this is for people who can't find a job, are pregnant, or have short-term disabilities. Then 16.3% goes towards health and social transfers, which funds healthcare programs and social programs across the country. 8% goes straight towards military spending and national defense. 7.7% goes towards paying off national debt. Another 16% goes towards other departments and agencies. So this includes stuff like the RCMP, Border Patrol, CRA, Veterans Affairs, Department of Justice, and a whole bunch of other ones. Now 2% goes towards crown corporations. So this includes things like our postal service, which helps us get our mail, and the Via Rail train system. And there's also a few other sections as well. You can also see how this is different from the US's federal budget as well. And they do change slightly every year when new budgets come out.
So our money goes to a bunch of different places. And when we see things in that breakdown that we either don't understand or we don't want our money going to, then it's really easy to jump to complaining that taxes are too high. But are they? When you look at tax revenue versus a country's overall GDP, so how much of the country's output and earnings comes from taxes, the OECD average is 34.11%. Canada pretty much comes in right at the average amount, and the US is actually well below that at only 26.8%. Americans actually have some of the lowest federal tax rates in the world, and yet they still get pretty upset about them. But it's still fair to be upset just at the right things, like how complicated it can be, and again, how some people pay next to nothing in taxes. The system right now takes Americans an average of 11 to 13 hours to file their taxes. Now here in Canada, it's a little bit faster, but we still have to fill everything out on our own or get someone else to do it for us. But the government already knows a lot of information about us, so why do we have to take our time trying to guess what they already know? In Canada, it seems like one part of the answer comes down to the fact that the government only knows what some sources of our income are, like investment, employment, pension, and government benefits, but they don't know other ones like self-employment or rental income or capital gains. Now, they could create a system that helps the 32% of people with basic tax returns, but it just doesn't sound like a priority right now. Now, in the US, a big part of the answer is that tax preparation is a multi-billion-dollar industry. So companies make more money if the system stays complicated enough that people need someone to help them do it. So these big corporations spend a lot of their time lobbying the government to make sure that it doesn't get simplified, even though it probably could be.
And then this brings us back to the fact that the most wealthy people sometimes pay the lowest amount of tax. Now, if we take a look at the highest federal tax rate, so the most amount of taxes highest income individuals would have to pay, this has changed a lot over the last century. This chart is specifically for the US. It's clear, especially now, that it's been consistently staying at the lowest rate that it's ever been. This year, it's at 37%, when as recently as 1981, the top tax rate was 70%. But look at how much closer the highest and the lowest rates are to each other now versus the past. The lowest rate is at 10%. The thing is, really rich people typically find ways to not even have to pay that rate. Remember, they have the time and the resources to find ways of how to do this legally. So a lot of the time, they won't even take out a salary that was subjected to those high income tax rates. A lot of the time, they'll take out their money in stocks or in dividends. See, assets are taxed differently than the money that you make from your salary, and the rates are lower. Now, this entire breakdown would take a really long time to actually go through, but here's the high level version. If you take a salary of $0, you avoid paying any income tax, but then you'll be able to play with other tax rates like the long-term capital gains tax. So let's say instead of taking a salary of $400,000, instead you sell $400,000 worth of stock that you've held for more than a year. Based on these tax rates, you'd only end up paying 15% in taxes versus the up to 35%. So your income would be made up of money that's taxed at a lower rate than your typical income. Or even better than that, people won't sell their assets and investments, and instead they'll take out debt. Now, the reason they're able to do this is because the banks and the financial institutions that are giving out these loans and debt, they trust that these people are gonna be able to pay it back because of how large their wealth is. And these interest rates on these loans can be lower than taxes. So even though they're paying back debt, they're still paying back less money and not paying any money to the government at all. This isn't something that everyone can do, but there are ways to set yourself up to pay less taxes in the future. For example, by buying assets, stocks, or real estate, just as an example, and also by paying yourself out in ways that are taxed lower. Now, for now, in the short term and for the general individual that's out there, here are two things that you can do. Number one is making sure that you're using as many tax deductions as possible based on what you're eligible for. Number two is utilizing your tax advantage investment accounts. Now, there's deferred ones like the 401k and the RSP, which bring down your taxable income in the current year, but you'll likely want to use those during the years where you think you'll make the most money and you're up against the highest tax rates. Your other option is tax-free accounts like the Roth IRA and the TFSA, which doesn't bring down your taxable income now, but it will in the future once you go to take out that money. Now, if you want to hear more about how to invest your money in those different accounts, check out this video next to get started. And yeah, we'll see you next week. You guys already know the vibes, and let's go.